We got some pretty big news for Upstart stock investors, the company highlighting the macroeconomic factors that are benefiting and hurting the business overall. Of course, being a lending company, macroeconomic factors like interest rates and unemployment play a crucial role in business prospects. So, I wanted to highlight the latest news for Upstart stock investors and what it could mean for shareholders.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So the company's management CFO saying that the macro environment continues to be an influential factor in the business. Our belief is that inflation is largely behind us. The enduring strength of our labor market continues to astonish, and the US economy suffers from a structural shortage of workers, making the odds of significant near-term unemployment remote in any scenario short of an economic meltdown. And I agree with these sentiments from the company's CFO. The data that I've seen from the US economy follows this observation as well. Inflation has been trending downward at a meaningfully quick pace, bringing it into the target range that the central bank likes to have, which is around 2% inflation. Additionally, unemployment remains extremely low by historical standards, and there is a shortage of workers. So companies, and it's difficult to hire and let go of workers. And then when you combine that with the shortage of workers, companies are reluctant to make layoffs. So even if they feel that they have too many people, which many businesses I feel like do have too many people, rather than letting go of people, they just, reduce their hours maybe, or reduce the number of days that they work, or maybe they assign them into training exercises instead of them having them in production. So they're finding workarounds to not let go of employees because they understand how difficult it will be for hiring or rehiring employees when business picks up. And so they just kind of moderate the amount of hours and the amount of days, and they're not letting go of people. So layoffs really accelerated in late 2022 and early 2023, just as central banks rapidly increased interest rates. Businesses started letting go of individuals in the tens of thousands. So you had announcements from companies like Amazon and Microsoft and Meta Platforms and Alphabet and others, slimming down their ranks because they were afraid that those rapid interest rate increases would cause a slowdown in the US economy, which never happened. And the management team saying here, consumers in the US have continued their remarkable spending spree. And this has been true. People in the US have just been on a remarkable spending spree, even after, you know, a couple of years removed from all of the fiscal stimulus that went into the economy. Consumers in the US are still spending money robustly. And so that's been a tailwind for Upstart because, as you know, they are a business that uses artificial intelligence to make lending decisions. It's a platform that brings together borrowers and lenders. And when the economy is performing well and people are not losing their jobs, this type of business does really well because people usually make their loan payments if they're employed and making about the same amount of money. It's when people start to lose their jobs or have a significant decrease in income when they start to default on loans. That's when this kind of business really struggles because you start to realize all of those defaults and you have to account for all of those loans that are no longer going to be paid back. But since the economy has outperformed, Upstart hasn't experienced that. So that's been good news. And they talk about that, right? Consumer defaults on unsecured credit have stabilized over the course of the year, easing down from their peak to a lower but still elevated level of stress. And if they think this is an elevated level of stress, I don't think Upstart has been through a proper recession before where default rates really accelerate and people start to miss their payments on all sorts of things, not just on credit card and personal loans, but when you start to see people missing their car payments and uh, missing their mortgage payments, that's when you're in a proper recession, because those are the last things people uh, default on is their car payment and their home payment. Because if you default on your car payment, the company will come and repossess your car and you won't have a car to get around. You won't have a car to get to work if you happen to have a job. And similar story with your home. If you miss your house payment, your mortgage payment, the bank will come and repossess, they'll foreclose on your house and you'll be put out on the streets. So those are the last things people will not repay. Initially, the defaults will start in credit cards and personal loans because those don't have the type of collateral attached to it. Now, there are some consequences to missing your credit card payment or missing your personal loan payment, but they're nowhere near as severe as missing your car payment or your mortgage payment. And so when you start to see defaults in those more important categories rise, that's when you know you're in a proper recession. And we're nowhere near that level right now. If you want to observe a proper recession, you can look back at the data from 2007, 2008, 2009, and look at how default rates exploded in those important categories in those years. So for the company overall, net revenue in the third quarter was 20% higher year over year and 12 million better than the management team expected. Now, this is true across the board for lending companies. If you follow my videos on SoFi Technologies, which also deals with similar types of personal loans like Upstart does, they also noted that this year has gone much better than expected, that the economy did not slow down like they were expecting. And you're hearing a similar story here from Upstart. The volume of loan transactions was approximately 188,000. That was up 64% from the same time last year. And that represented over 118,000 new borrowers with an increase of an average loan size of about 10%. Now, the big reason why the volume of loan transactions increased was on the supply side, not on the borrower side. Upstart experienced a surge of interest of lenders on the platform. There's always a lot of borrowers on the platform. It's the lenders that are holding back Upstart's growth. If lenders continue to lean into the platform, then Upstart can grow much quicker. And the reason lenders dipped in more is because of that strong macroeconomic data. It let lenders feel like a recession is significantly less likely. And so they were more interested in making loans because they were not afraid that there's going to be a recession and people are going to miss payments. So that drove a lot of growth for Upstart, not just in the third quarter, but in 2024 overall. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.